I'm Jarrett Carpenter, and this is Future Signal. On this episode, we're going to dive right into the presentation that I have here on Bitcoin or single family home and ROI analysis. Before we go any further, you should know this is not financial advice. This is edutainment. If you're listening to this on a podcast platform, you may want to click the link in the description. Go check this out on YouTube. Put together, I think it's like a 45 slide presentation, but it really needs that to be able to get through the breadth and depth of what it would be to compare Bitcoin versus the buying of a single family home. Now, this is a conversation that a lot of people have, especially millennials and Gen Zs, because they're looking at it and they're like, where's the best place to put my money? A lot of people look at a single family home and they're like, this is an investment. Well, we're going to dive into that today. Let's get going. The roots of this go back to a video that I was on. I was a guest on my buddy's podcast, Grant Sparks, and this is the thumbnail of what it looks like. So really the question came down to Bitcoin versus real estate. Where would you put 100K into Bitcoin or real estate? And so on this episode, we're really going to focus on the idea of a single family home, putting 100K into a single family home or 100K into Bitcoin, okay? Here is a screenshot of what that looked like. This is back in the day. My background was very different. And you'll see that this was on June 5th, 2022. This is coming out today. I'm recording this today on June 5th, 2025. So we have a 36-month case study, a 3-year case study. And over this 36 months, we're really going to be comparing the investment of 100K into Bitcoin or 100K into a single family home. I'm going to be using the abbreviation SFH if you're watching this. So we're looking from June 5th, 2022, where I got on that podcast and was talking about, hey, I think it should be Bitcoin. He's more of a real estate maxi. He was saying he thinks it should be real estate. And going all the way till today, I wanted to have this come out on today because today is June 5th, 2025. So 36 months or 3 years. Let's dive right in. So my TLDR, my argument was like, look, I think Bitcoin's better for 2 reasons. One, it has a better ROI. Financially, it just makes more sense. And then something that's really, really important, and the more you get into investing, the more you get into money, is it's going to be less use of my energy. My energy being really my time, right? My bandwidth, my mental space to like think about this. So that's why I was pushing Bitcoin. I'm like, this is just simple. You're going to put the money in, and it's going to have a better yield financially or monetarily, and it's also just going to use less of my time. So those are like the two big talking points that I was talking about on that episode. So better ROI. Just to break that down, it will leave me with more money at the end of the 36 months, implying a sale of either the BTC or the single family home. So the idea is like 3 years ago, 2 people hypothetically, I put 100K into Bitcoin and Grant would put 100K into real estate or a single family home. And then we're basically just going to see at the end of the 3 years, if we were to sell today, who would be better off. And then the other one is, less of my energy. I kind of went over this, but which will take the least amount of my time during the 36 months between those 2 investment vehicles, those 2 vehicles, either the Bitcoin or the single family home. So if you look back on 6/5/2022, 3 years ago, what was the price of Bitcoin? What was the price of a single family home? Finding Bitcoin's a little bit easier, and here we go right into it. Throughout the June 5th, 2022, Bitcoin's price had a low of 29.5 and a high of like 31 or 30,100 more or less. And I'm rounding. You can see the numbers on the screen. But for this episode, we're going to use 30K to represent the price of Bitcoin 3 years ago on June 5th, 2022. To think about the price of a single family home, the median sales price was $402,400, and the existing single family homes 3 years ago was $413,800. So the average of these two is 408, and what we're going to use is 408 as a working number to represent the average home price 3 years ago on June 5th, 2022. So there we go. A Bitcoin was worth 30K, and a single family home was worth 408K on June 5th, 2022. Okay? Today, however, is 6/5/25. If you're watching this on the day that it comes out, what is the price of Bitcoin? What is the price of a single family home? We really need to establish this so we can start to, compare apples to apples the best we can. So I finalized this episode on June 4th, and when I did this yesterday, basically it was 105. So these are going to all reflect that. I am conscious that right now the Bitcoin price is around 102.5. We're talking about percents, so let's just go with this 105. The price of a single-family home, medium sales price on June 5th today is $407,200. The medium sales price of an existing single-family home is $402,300. So we're going to put those together. We're actually going to come out with $405,000 as of June 5th, 2025. Now, if you remember, The price, and we're going to go to the bottom here, of a single family home on June 5th, 2022 was 408. Today, it's 405. So off the bat, if you're just looking at it like from 30,000 feet, single family home is not looking too great right now. If you're looking at the Bitcoin, however, it was 30K when I recorded with Grant on 6/5/2022. Today, it's around 105, right? We're going to use 105 for this episode. I am very consciously aware that right now Bitcoin's a little bit under that, but to be fair, it fluctuates so much, we have to pick a number and go with it. So we're going to use 105 for this episode. So this is kind of what it looks at a glance. You know, if I bought 30K worth of Bitcoin and I had 100K, it would give me 3.3 Bitcoin, which on June 5th would be, 2022 would be 100K, and today would be around 347K. So the ROI there being $247,000 pre-tax, right? Pre-tax. And then the percent change would be around 247%. And if you look at the single family home, you would have gone from buying the home at a sales price of 408, and today it's worth 405. So you would have lost $3,000, or you'd be down, a tenth of a percent. But this is really important. And you're probably already looking at this and saying, this is wrong, or you're listening to me on a podcast platform. You're saying, whoa, that is not the whole story. As I say here, this is not the whole story. We need to think a little bit more deeply before we start comparing these things. So Bitcoin, however, is kind of simple. If I bought it in 2022, when I go on the podcast, I'm talking to Grant, and then I store it properly. So, you could add in, $150 for a cold storage wallet that I have there. In 2025, you'd be up around $247,000 pre-tax. And there'd be little to no energy or time in this investment. That's it. I buy it, I get it off an exchange or wherever I get it from, I put it in cold storage, and that's it. And I wait 36 months, and then today, I'd be up $247,000 pre-tax, not taking into account taxes. You would be in long-term capital gains, but we're going to adjust taxes, okay? However, the single-family home is a lot less simple because it's not like you bought the house for $408,000. That was the sales price, and then today it's on the market worth $405,000, okay? We need to take into account the equity built up by mortgage payments and the monthly payments, annual taxes, insurance, and maintenance costs, which I'm going to lump those together and call overhead over the 36 months. Because unlike Bitcoin, where I would just go ahead and get my 3.3 Bitcoin back in 2022 for 100K, Grant over this time, if we're going to use Grant as the hypothetical, as he was the real estate maxi pushing for real estate over Bitcoin, with his 100K, he would then have to do some maintenance. He has to pay taxes. He has to think about insurance. He basically has overhead to take care of his investment, right? The upkeep of his investment. So in order to figure out the single family home real ROI analysis, we need to create some working assumptions. So if you use 100K as a down payment on the 408K home, that's what we're going to do. He would have gotten a 30-year fixed mortgage. Maybe he got a 15, but we're going to go with he got a 30-year fixed mortgage. And as of 6/5/2022, that was at 5.5%. Okay. The timing of when you get your mortgage is very, very important as you look over your amortization schedule. Okay. Home insurance would have been about 0.4%, which is a national average. Annual maintenance on average is about 1% annually. Annual taxes, it fluctuates, but I went for the average here, which is about 1.2%. So these are the numbers we're going to use as we try to understand the single family home investment. Okay. So here is the single-family home investment. I broke it down here. Once again, if you're listening to this on a podcast platform, you really need to go see this visual. If you're on YouTube, amazing. Please, honestly, consider subscribing. That would mean a lot to me. But here we are. So as you're looking at this mortgage, these would be the payments. So the monthly payment, I think, is like $1,789 per month, but it adds up to this $20,985.48 year over year. So you have those 3 years there, that's added up. You have your taxes, you have your maintenance, and you have your insurance. And when you add all that up, you get $94,780.44. That is overhead. That is the money that you need to put in to your single family home to pay the mortgage, right? To pay down that 30-year 5.5 fixed percent mortgage. The taxes, the annual taxes, 1.2%. The maintenance, the 1%. And then the insurance, right? This is the amount of money you need to put into the deal to basically protect your original 100K down payment. So how much of this overhead investment to keep up the house and running can we add to the 100K that was left as a down payment that we kind of we built in the 100K of equity when we put that into the house? So between 6/5/2022, between June of 2022 and June of 2025, the total home equity for mortgage payments alone would be approximately $113,000, which includes the original $100,000 that we put down, and then about $13,162 in principal paid over the first 36 months, and the remaining mortgage balance would be around $295,000. Now, if you're thinking, oh my gosh, man, we actually paid $62,956 with 44 cents of monthly payments over those 36 months, how are you telling me that right now, from that $65,000, we're only getting $13,000 in equity? Well, that's because the principal only increased by, or I should say, here's why the principal only increased by $13,000 over the 36 month. Because even though the monthly payment, here's the monthly payment, is $1,748.79, that totals to that number that we have around $62,000, nearly $63,000 over the 36 months. Only 21% of that is going actually to your principal. And this is because early on, so much of the payment, the other 79% of the interest of the payment, is going on to pay interest. So this ratio will eventually shift where you're going from really only getting 21% out of every monthly payment that's going to go to your principal or really to build your equity. This does shift. Around years 16 to 18, more of each payment that you pay monthly will actually go to principal. But the banks where you're going to have this, or your mortgage lenders, they're greedy. They want their interest up front. They don't want you to start building equity for a long time. So then by year 30, yes, by the end of the mortgage, almost all of the final payments will go towards principal. But this is kind of tough. And if you are a single family home owner, this is why they say you want to wait a certain amount of years before you sell a home. If you're in a home for under like 5 to 8 years, obviously it depends on how long you have your mortgage. If it's 15 to 30, if it's a fixed rate, there's other things, how much money you put down, your amortization schedule, that's all going to be different, honestly, for almost every person. And then you have to time the market, right? But all of this is to say, it is kind of a letdown that when you pay, here we go, when you pay that $62,000, almost $63,000 over the 36 months in monthly payments of $1,748.79, you're only going to get out from that around $13,000. You're only going to get 21% of that is actually going to go to your equity. And I think that personally hurts. So when we go back to this question, how much of this overhead investment, or the $95,780 to keep the house up and running, or really to keep the investment up and running, can we actually add to the $100K that was left as a down payment? The answer is 13, right? And we've talked about that. And so really what you're left with is $81,000 over those 3 years between payments that didn't go to your principal, payments that only really went to your interest, and the overall taxes, the maintenance, and the insurance. You know, because those out of that $63,000, only $13,000 went to paying off to paying principal, right? Which is actually goes into your equity. Basically, $81,618. You can see the number on the screen. Almost $82,000 didn't go to anything. That went to you just keeping the game alive, keeping the investment alive, keeping the house moving forward, making sure you're paying the taxes, the maintenance, and the insurance. So how much of this overhead investment to keep the house up and running can we add to the $100K? We've talked about this. Only $13,162. How much can we not add? $81,618.44. That is what we cannot add. That is money that was basically spent on interest. Therefore, it didn't go to the principal. It didn't go to building our equity, which is really quite tough. So taking into account the original $100K down payment, the equity gain and overhead costs, see below. And I say we're not showing any house appreciation for this particular hypothetical single family home because from June of 2022 to June of 2025, the actual average house price actually went down $3,000. So here you see in the chart, you have the down payment of $100K. Then you have the overhead that we're going to take out. But then you have the equity gain, which is a positive. But what that leaves you with is only $31,000, $31,543.56. Obviously, this assumes a sale today. This assumes that you had the house for 3 years, you paid all the taxes, you paid all the insurance, you paid all the maintenance, and you were making the monthly payments. You only gained $13,000 actually in equity because the rest was paid off to interest, which is where the bank wins, right? If you have a home and you buy a home for $500,000, you may end up paying $800,000 over the life of the mortgage, right? But you're only going to get $500,000 in equity because the rest is going to be in paying down interest. So when you do this, you're really only left with $31,543.56 if you were to sell today, if you only had the house for 3 years. So once again, let's go back to this ROI at a glance. Hopefully these numbers start to make a little bit more sense. When we look at that top chart, that second line for single family home really doesn't make sense because we only actually put 100 down. And if we were to sell it the next day, we'd really only have about that much money out of the 408, which is the sales price, to really be able to then get out in profit. So we have to really look at the lower tier, the lower graph there, which does take into account that and really leaves us with 31,000. But I really want to call this out because if you're watching this and you're a real estate maxer, if you're thinking about this, you're like, this assumes that the Bitcoiner, right? Me in this hypothetical, that I didn't pay for housing, right? So when we add in, and I looked up the average rent for a 1-bedroom apartment in the United States for, starting in June of 2022 all the way up to June of 2025, it's around $1,700. So I said $1,700 per month. Let's add that up for, $1,700 by 36, we get $61,200. And this will give us a little bit more of an accurate ROI. So if the Bitcoiner were to sell their 3.3 Bitcoin today that they got in June of 2022, they're selling it in June of 2025, and they put in 100K, they'd have a pre-tax profit of the 247. We've kind of already touched upon that. But they had to live somewhere, right? This is what real estate maxis will always say, but you got to live somewhere, man. Even though I know so many people in Bitcoin who are intentionally not getting into real estate, single-family homes, because they would rather rent and just buy Bitcoin. Or they would rather, even people who have sold their homes or sold real estate, taken that lump sum, maybe 100K, they'll put it into Bitcoin and then they'll continue to rent. And I think hopefully this is starting to give you a picture as to why. So they then spent $61,200 on rent for a 1-bedroom apartment. That was the average price over those 36 months. We could subtract that, and they were left with a potential pre-tax profit of around $185,000 or $85,000 in pre-taxes, in pre-tax profit, right? Because they originally put 100 in, so we're taking that away. So they have $85K in pre-tax profit. Now, depending upon where you're paying, if you set up a business structure, we're not going to take those things into account. But right now, $85K in pre-tax profit. This would be long-term capital gains because it's been more than a year. If we go down, if the single family home owner were to sell their house, they've bought it in, they put the down payment on the $408,000 house in June of 2022, and now they're ready to sell it on June 5th of 2025. And maybe this is Grant in the hypothetical. They'd only have gained $13,162 in equity and would have spent $81,618.44 in overhead, which would have eaten into their original investment in equity, bring that down to around $31,543.56, or a loss of around 69%. They put in 100K, then they had to keep up the investment, and if they were to sell it 3 years later, they would have been down 69% and only be left with $31,000 of their original investment. So the Bitcoiner would have $85K in pre-tax profit. The single-family homeowner would be down to $31,000 of their original 100K investment. Hopefully this makes sense. If we go back to the original idea, my original argument was that Bitcoin was going to have a better ROI, and we can see that from here, has a better ROI. This one, you are down so much money, and if you actually take into account the difference of this investment, it's actually quite large from the original 100K. But then my other part was, it will also use less energy. I will spend way less time with the investment, because if we go back, you basically buy it. I would have to get it on cold storage, and then obviously take care of my seed phrase, as anyone in crypto or Bitcoiner does, and then that's it. And this is the final energy analysis I'm talking about. So the Bitcoiner would need to buy BTC and properly store it. By renting, they avoid taxes, maintenance, and insurance. Maintenance and insurance costs being variable costs that can fluctuate. Right now, maintenance is going up because labor has gone up, because there's a shortage. There's a shortage of labor in the United States, because many of the people who work in our construction industry in the United States are being asked to leave the country because they don't have the proper papers to be there. The construction materials are also going up because of tariffs. So you have those two. And insurance premiums around the country are going up due to the climate crisis. So those are two variable costs that can fluctuate a lot. And that is something that the homeowner will eat. Yes, obviously they will adjust the rent accordingly over time. But if you have to put a $30,000 into your new roof, that isn't something that the renter is going to pay. That is on the landlord or the owner. And single family homeowner, in this example, that's on them. But overall, little to no energy or time was spent in the investment, in the Bitcoin investment. However, for the single family homeowner, there was time spent on taxes and maintenance. And as any single family homeowner will tell you, their weekends are often taken up by things to do, and I'm using air quotes, things to do around the house. So it's really tough for me to say how much hypothetical time the single family homeowner would have spent on upkeep. But what I can say with certainty is it would be more than the Bitcoiner spent for a lot less financial ROI. Remember, we go back here. One was left with $85,000 in pre-tax profit. One was down $69,000 from their original $100K investment. And as I say here, and I think this is a very obvious thing, buying Bitcoin on an exchange, putting it on a cold storage wallet, storing the seed phrase, I'm going to honestly say 2 hours, and I think that is being generous. To keep up a home for 3 years, going through, different seasons, maybe natural disasters, other things that are going to happen. If you're buying the house, if it's new or if it's used, there's a whole host of things that are going to go, right? There's a whole host of things that are going to go wrong there. So you're definitely spending more than 2 hours over a 3-year period to upkeep that investment. So final analysis from June 5th, 2022 to June 5th, 2025, 100K invested into Bitcoin would have had a greater monetary ROI, right? And used far less energy or time than 100K invested into a single family home. And this does take into account that the Bitcoiner was renting that entire time. Even with that rent, as people say, oh, you're throwing away your rent, man. No, you're not. It's just a different strategy to be able to build wealth and honestly spend a lot more time doing things you want to do because you're not having to upkeep stuff. Items I left out. I didn't talk about a HELOC. Maybe throughout that time, you could have taken out a HELOC. You could have leveraged your equity and taken out a HELOC. This is where some of the infinite money glitch that real estate maxis will talk about, I didn't take that into account. Market timing. If you go back and look at Bitcoin in June of 2025, I think I don't know if it was a week before or a week after, Bitcoin was actually at 22,000. So this would have even been juicier for the Bitcoiner. And market timing as well. If you had bought this house in like June of 2021, I think the interest rates would have been much more favorable, lowering your monthly premium or your monthly payments, right? So market timing, that is a huge thing. Whenever you're making any investment, getting into the market and timing that is kind of important. Leverage on BTC. This person could have said, you know what? I'm going to actually take leverage on my BTC and I'm going to take a loan out because as that would have gone up 247%, they could have pulled money out similar to a HELOC. Didn't add that in as well. Taxes. The house, you can, depreciation plays a part in real estate. That is why a lot of people like that investment. We didn't take that into account. And we didn't look at any, long-term capital gains here. We just kind of left that out, okay? And finally, house hacking. Some people will buy homes and they will fill it with roommates. So that way, the monthly payment was like $1,700, I think, for the homeowner, which is actually very similar to how much somebody was paying in rent for the one bedroom, right? What I would have, as the hypothetical Bitcoiner in this, I would have been paying $1,700 for my one bedroom. Grant would have been paying, I think, like $1,750 to get his whole house. He could have been house hacking. Maybe he has 3 bedrooms. He puts, for $800 into two of the bedrooms. He lives in another one, and that honestly almost covers his mortgage. We didn't take that into account. So these are things I left out intentionally because honestly, it was very difficult to model with them in. If you did enjoy this, go back and check out. I'm going to leave the link below to that conversation. I listened back to that conversation, and it was kind of painful because there were things I said about Bitcoin, and I've just come a long way in my Bitcoin experience. But that's growth. Everyone comes to different conclusions on their Bitcoin journey. I've also recently just put up this episode, which really talks about Bitcoin versus real estate and breaks into these 12 philosophies of why I believe Bitcoin is better than real estate: portability, liquidity, divisibility, permissionless, scarcity, immutability, fungibility, third-party risk, taxes, maintenance, global marketplace, and humans. I'm going to leave that link below as well. I highly suggest you check it out. In fact, I'll actually put the link up here if you want to go check that out. So what did I miss? What would you add? What would you remove? What are the things that I should have taken into account? Was this fair? Was it fair to say that, is a 3-year period enough time for an investment in a single family home? The reality of it is probably not, but I still wanted to do this comparison. Overall, I think that this shows, though, why people, including myself, were deferring the idea of buying a single family home, which is really, I think, tied into the American dream, having the picket fence, right? And having the garage, having your own home, the lawn you can water. There are a lot of people who are Gen Z, Millennial, Gen X, Bitcoiners, I should say. This isn't about generations. It's about a philosophy idea. There are a lot of Bitcoiners right now who are deferring that and saying, I'm just going to keep my money in Bitcoin. And year over year, that house that I want, whether it's $500,000, $1 million, $3 million, it's actually becoming cheaper for me in Bitcoin terms, even though it's becoming more expensive in US dollar or fiat terms. So I think this was a nice little case study, an ROI analysis of whether you put $100K in a Bitcoin or whether you put $100K into a single family home. If you enjoyed this, please go ahead and you can see it on the bottom. Follow us on socials at Future Signal XYZ. If you're watching this on YouTube, go ahead and subscribe. If you're listening to this on a podcast platform, please go ahead and subscribe. Thank you so much for checking in on this episode, and I'll see you next time.